While consumers might be rejoicing over falling prices at the pump, some of the oil business are not. Now, two of them are teaming up, whether the smaller of the two likes it or not. In a $34.6 billion stock and cash deal, the world's second largest oil field services company, Halliburton, will take over the third largest oil field services company, Baker Hughes. Halliburton will offer $78.62 a share for Baker Hughes stockholders. Bloomberg calls it the largest takeover of a U.S. energy company in years, and notes the combined companies will still be just over half the size of the largest worldwide oil field services provider, Schlumberger. And though this is a huge deal in the oil realm, it's getting attention just as much for the negotiations leading up to the agreement. As the Wall Street Journal reported last week, things started to get hostile between the two sides. Halliburton reportedly threatened to force out Baker Hughes board members in an effort to get the deal done.
There was suspicion that this deal was going to go hostile because Baker Hughes had said, we are not doing it, right? What had happened last week was they were in talks, then Baker said no good. Now we're back, and this is a friendly transaction.
And USA Today points out the deal also has implications for recently falling oil prices. The outlet writes that barrels of West Texas Intermediate crude reached their lowest price in the last 3 years, creating both havoc and opportunity for companies tied to the price of oil. Much of that price drop is attributed to the increased U.S. shale oil production through fracking and the Organization of the Petroleum Exporting Countries' current unwillingness to lower its own oil production and limit supply.
So a massive deal, but against the backdrop of a big turndown in the oil market.
In the oil market, which is probably why this deal sort of has come together at this time.
Yeah, it could well be because they need power against the oil companies.
The deal is expected to close in the second half of next year, but will also likely face intense federal antitrust scrutiny. For Newsy, I'm Matt Morano.